In a world where financial decisions can shape your destiny, the choices you make with that $1,000 today could set you on a path to financial freedom or leave you struggling in the long run. You've already taken the first step by saving, a commendable feat in itself. But the real question is, how can you make your money work harder, ensuring it not only grows, but also paves the way for a secure and prosperous future? As we delve into the world of investing, self-empowerment, and debt management, you'll uncover the tools and strategies to maximize your financial potential. Be sure to like, comment, and subscribe to the New Africa Wealth for more informative videos. Self-investment is similar to sowing the seeds of success in the rich soil of one's potential. Consider it your personal growth fund if you had an extra $1,000. By allocating some of this money to advancing your knowledge and abilities, you are effectively fostering your development. This could entail signing up for online classes, going to workshops, or even buying books that pique your interest. Your efforts in self-education can offer a firm foundation for your future success, just like a tree that grows stronger with deep roots. As Warren Buffett wisely puts it, the best investment you can make is in yourself. Think about this. Let's say you choose to spend some of that $1,000 on learning how to code, a skill that is in high demand in the labor market right now. As you advance in your learning of coding, employers will value you more, creating prospects for higher-paying jobs or freelancing work. In addition to assisting, you end up securing a better income. That original investment also has the potential to keep increasing over time. Investing in oneself is more than just obtaining knowledge. It also entails sowing the seeds of one's own personal and financial development to reap a bountiful harvest down the road. When it comes to increasing your $1,000, having other income streams might make all the difference. Imagine yourself sowing seeds in a financial garden. With the right care and attention, those seeds could blossom into an orchard. Investigating the world of freelancing or launching a side business are two fantastic ways to achieve this. If you have a skill in graphic design, you could be able to do freelance work in your spare time and help people who need it. With every assignment finished, you not only increase your revenue, but also develop a portfolio that may one day draw even more lucrative opportunities. It's similar to tending to a money tree. The more care you give it, the more fruit it will produce. The strength of the internet, though, is a fascinating alternative to take into account. In the modern digital age, there are various ways to make money online. Maybe you're good at writing or have a love for photography. You can launch a YouTube channel, a blog, or an online shop where you can sell your images. These online stores enable you to access a global audience and turn your interests or talents into sources of income. Remember that even tiny streams can combine to form a powerful river, and with perseverance and innovation, you can watch your extra income sources develop over time. Investing in the stock market can be a potent strategy to increase your wealth and earn passive income, especially if you just have a small amount of money, $1,000, to work with. One wise course of action is to think about investing in index funds rather than diving into the frequently unpredictable realm of individual stocks. These funds provide a diverse portfolio of stocks, which spreads the risk and lessens the influence of the performance of particular companies on your investment. Instead of placing all of your eggs in one stock, it's like getting a piece of the entire market pie. Index funds that follow the performance of the larger market, like VOO or SPY, have shown to be dependable options. When the U.S. economy rises, these funds rise with it, and when it falters, they tend to follow suit. This steady growth over time can provide you with a stream of passive income and potentially substantial returns without the stress of managing a portfolio of individual stocks. Index funds are elegant in their simplicity. You don't have to spend hours investigating each company to get them, and they are simple to buy. Index funds provide a practical method to share in the potential profits of the stock market, regardless of your level of experience. It's a hassle-free way to increase your wealth over the long run because you may start with your $1,000 and steadily add more money as you go. Additionally, it is consistent with the advice of legendary investor Warren Buffett, who has long endorsed index funds as a method for regular investors to gain from the market's overall rise. Over the years, countless investors have been drawn to real estate investing because it is an effective technique for accumulating money. It provides a rare chance for both long-term development potential and passive income generation. You don't have to be a millionaire to start investing in real estate, which is one of its alluring features. You can enter the real estate market through a variety of channels, such as real estate crowdfunding platforms or real estate investment trusts, even with a small initial investment, such as $1,000. By combining your financial resources with those of other investors, you can gain access to real estate markets while lowering the financial obstacles that frequently arise with direct property ownership. Depending on your chosen strategy, when you invest in real estate, you can own individual properties or portfolios of assets. If you want to invest in residential or commercial properties, this may generate rental income for you or dividend income if you choose REITs. Furthermore, it is common for real estate assets to increase in value over time, which could lead to significant capital gains. Real estate investments can result in substantial financial gains, but it's crucial to recognize that there are hazards involved, such as changes in the market and difficulties with property management.
Can't make progress in your financial life going around borrowing money at 18 or 20%. You can make a lot of money by lending it out at 18 or 20% over time. If you can find anybody that's good that will borrow from you. But you don't want to be on the side of the equation that's always behind in life.
Paying off your debts as quickly as you can is a wise and practical alternative if you're hesitant to invest or prefer a more conservative approach to handling your money. This plan not only protects your finances, but also provides a measurable return on your financial self-discipline. Exorbitant interest rate borrowing, like that at 18 or 20%, might seriously impair your financial success. While there is potential for profit when lending money at these rates, it frequently necessitates locating reliable clients. Instead, setting debt repayment as a top priority keeps you from always being on the losing end of the financial equation. Let's look at a typical case to demonstrate the advantages of early debt repayment. Consider taking out a loan for a car, a house, or educational expenditures with a moderate 4% interest rate. You get a 4% return on your investment by repaying this loan just 1 year early. You won't be required to set aside money for debt servicing for an additional year. If you're hesitant to enter the stock market or real estate markets, adopting this strategy may appeal to you in particular. In addition to boosting your financial stability, it also ensures more liquidity when you cut back on monthly spending, giving you the financial freedom to take advantage of present possibilities and lay a stronger financial foundation. Two effective methods for doubling your initial $1,000 investment and attaining financial success are collaboration and networking. Building a strong professional network can provide access to a variety of opportunities and insightful information in the world of today. Connecting with people in your sector or area of interest will give you access to a lot of information, mentoring, and prospective business relationships. Networking may help you keep informed, inspired, and connected to the constantly shifting world of financial opportunities. It can be done in a variety of ways, including attending industry events, participating in online groups, or just contacting people on sites like LinkedIn. Collaboration is yet another crucial component of economic expansion. You can use other people's skills and qualities to your advantage by working together to get more notable results. Joint ventures, Partnerships and cooperative initiatives can give you access to tools, know-how, and capital that may be out of your price range as a sole investor. It's critical to look for agreements where both sides may contribute and gain from a collaboration. Now, let's talk about embracing entrepreneurship as a way to multiply your initial $1,000. Think of entrepreneurship as your golden ticket to financial growth. It's like planting a small seed that has the potential to grow into a thriving money tree. Entrepreneurship can take many forms, from starting a small online business to launching a creative project or offering a unique service. The key is to find something you're passionate about, and that solves a problem or fulfills a need in a market. Maybe you have a knack for crafting, love cooking, or are a whiz at graphic design. Whatever it is, there's an entrepreneurial opportunity waiting for you. The beauty of starting small is that you can test your ideas without risking everything. So grab that idea, create a simple plan, and take that exciting first step into the world of entrepreneurship. It's not just about making money, it's about doing what you love and watching your investment grow through your hard work and creativity. Patience and discipline are like the unsung heroes of the financial world. Think of them as the steady hand that guides you through the sometimes tumultuous waters of investing and wealth building. Patience is your friend when you're itching to hit the panic button during a market dip, reminding you that investing is a long game and short-term fluctuations are just part of the ride. It's the reminder that Rome wasn't built in a day, and neither is your financial empire. Discipline, on the other hand, is your financial coach, ensuring you stick to your plan even when temptation lurks around every corner. It's that voice in your head that says, "No, you don't need that impulse purchase. Stick to your budget." Together, they form a dynamic duo that can help turn your modest $1,000 into a robust portfolio. Discipline is your financial compass, helping you stay on course even when the seas get rough. It's about sticking to your budget, consistently saving or investing, and resisting the urge to splurge on unnecessary expenses. Think of it as your financial workout. It might feel tough at times, but it's the key to building financial strength. Thank you for watching our video on how to increase your $1,000 this year. We hope you found the information insightful and useful. If you enjoyed the content, we would appreciate your support by leaving a comment, giving the video a like, and subscribing to the New Africa Wealth channel. Stay tuned for more engaging and informative videos in the future.